There's some new data out this morning that's giving us a better idea of the status of the economy. First quarter report showed GDP is up by 1.1% from the fourth quarter of last year. Estimates were projecting it would increase by 2%. The collapse of several regional banks in the first quarter heavily impacted the markets. Those stocks did still perform quite well. And first-time unemployment claims are down for the first time in 3 weeks. Filings dropped by 16,000 in the week ending April 22nd to 230,000.
So Javier David is here with us now in Studio 57 to break down what these numbers mean. He's the managing editor for business and markets at Axios, and he's also a CBS News contributor. Also a guy who makes me smarter every time he shows up. So let us talk about the economy. It's looking okay.
Yeah. Well, the good news is we didn't contract. So we barely grew 1.1% annualized. It's about less than half.
But that's what you want.
Yeah, that's what you want. You do want that. And the interesting thing is consumers are they're getting tired, but they're still apparently not as much as we thought because they're still shelling out money on the various things. Adjusted spending up by 3.7%. That's up from 1% previously, but less than what economists expected. And so now we're in this part of the cycle where the numbers are going to start to come in softer than expected, as opposed to that very strong run of like gangbusters data that we used to have.
When I say that's what you want, I kind of meant that's what the Fed wants.
Exactly.
Right. So hopefully they're, watching this and determining whether or not another interest rate hike is needed when they have to sort of do that.
Right.
Speaking of consumer spending, what is going on with consumer spending?
Well, consumers are just adjusting to a high rate environment where interest rates are higher. One of the weaknesses in this GDP data was in housing and business investment. Housing, as you know, very influenced by interest rates. Mortgage rates up near, still sort of dangling near 6-7%. People are not doing as much with mortgages as they used to.
Okay, so it's kind of like the big ticket stuff. I remember once reading about, I don't know exactly what it was called. It was something like the lipstick index, right? And the argument was basically that when times are kind of tough, people still want some creature comfort, so they might
they
spend.
Still want their Starbucks, they still want their lipstick.
So you blow a lot of money on one expensive lipstick, even if it means you're not getting, the fridge with the monitor in it and all that kind of stuff.
Precisely.
Yeah.
Yes.
Okay, let's talk about some banking news. And just, obviously banks and the instability of some of our banks have made a lot of headlines. First Republic comes out. First Republic is not looking very healthy at all.
Yeah, it's really starting to look, as with every hour that passes, that there is going to have to be some form of government intervention. Really? Yesterday, their stock had to be halted on the New York Stock Exchange 16 times because it was so volatile and investors were selling it off so sharply that, when you have a stock that's moving very quickly, the exchange kind of intervenes and puts in a halt. Sometimes they stop it for news or pending or something. But this was one of those days where the stock was performing so badly that they literally had to hit the pause button and then let it restart. But all told, this is a stock that used to trade 52 weeks ago, almost near $200. And now it's dangling near what I think $8, $7 now.
Oh my
Maybe even
gosh.
below, yeah.
You know what people are going to start to think? They're going to think, and when we were having all this information about Silicon Valley Bank and everything, everyone said, don't worry, the system works as it should. The government intervened, everything's fine. But then you hear about
the funny thing is here, people are starting to sort of disaggregate First Republic from what's happening in the rest of the sector. First Republic's in a lot of trouble. The rest of the sector is actually doing pretty well. If you look at the banking index, so it's one of these indices that we follow, off 3% yesterday. Even if First Republic stock was absolutely crushed in double digits.
Okay.
So much more modest decline there, which suggests that investors are starting to kind of separate the wheat from the chaff. And at this point, First Republic is kind of the chaff.
Okay, so we'll put First Republic aside.
Yeah.
There is stability. Back to the numbers that we've been looking at and how things are cooling.
Yeah.
Which is what we ultimately hope for is a cooling of the economy without the bottom falling out.
Without the bottom falling out.
Is it too soon to say maybe we can stop talking about the possibility of a recession, or is that still a risk?
Yeah, well, the recession is still very much on the table. And in fact, that's everyone's base case. But the good news is it is likely to be mild. But all of this turmoil in the banking sector, not good. It really does influence how people, what they think about their confidence. Are they going to pull money out? The irony is you have all of these high savings accounts, so people have alternatives. If they're stocking, people are actually saving more money. And one of the reasons why is because all of these accounts, like Apple just launched its own high yield savings thing last week. there are alternatives for people that want to stock money away and earn more, as opposed to spending it on your lipstick or your Starbucks or whatever.
Not that there's anything wrong with spending money on a little expensive lipstick every once in a while.
Creature comforts, we all got to have them.
Javier David, thank you very much.
Thank you.